Welcome everybody to the next video of this A to Z Forex program. First of all, I just want to apologize. It has been quite a while since I've posted the previous video. I had some time off. I enjoyed my birthday. It was my 21st. I had some friends that came down and it was a really good time. So unfortunately for you guys, it meant that you didn't get any video. So I just want to apologize for that. But in this video, we're pumping on now. We're on sort of the tail end of this A to Z Forex program, up to slide 58, and there's about 50 more slides to go. So we've just gone over halfway, but there's so much more to learn, and it may seem overwhelming and confusing right now because you're learning bits and pieces, but I promise you I will actually tie that all together and show you how it all comes together in one big strategy. Now, this isn't the strategy that I personally use, but I have used it in the past and it's given me awesome results and awesome performance. And I do use it when I'm scalping, but my main focus now is trading on a 1 to 3 month time horizon and long-term investing as well. But this is a great stepping stone for any traders that want an extra edge, want an extra understanding of how trading works and markets actually work, but also you might be able to use some of these tools and techniques in your own personal strategy and you can build something of your very own. And that's the most important thing, right? So what we're going to be talking about in this video is viewpoints or ranges. You might have heard ranges before. I call them viewpoints. But essentially what you want to be able to do is whether you have a fundamental bias or not, or even a technical analysis bias, you need to be able to confirm that and sort of think of it like a magnifying glass. You want to be able to scope in and see what's happening in real time and what behaviors the asset is actually showing you. So just say you have a bullish fundamental bias, you want to be able to confirm that with fundamentals, and viewpoints allow you to do so. So I'm actually going to go through and do a bit of an analysis just using viewpoints and market structure, because we've spoken about that in previous videos, on its own. So what we're going to do, I'm on the weekly time frame now. I hope you can see everything with my fat head. Yeah, I'm not in the way. If you guys want me to just minimize this, get rid of my face altogether, I absolutely can. And just be off the screen. But some of you like looking at my head, so anyway, weekly viewpoint. So we've got price action, right? We zoom all the way out. We look at the monthly time frame. We can see that this asset's typically trending downwards. We come to the weekly time frame. Now, for most beginners, they really struggle to understand where they need to start when they're looking at viewpoints. So you just need to look at essentially the previous low and high of a move. So what I can see, or straight off the bat, is this is the turning point of this overall move, right? This is the point at which price started trending upwards. So what we'd be looking for is sort of bullish market structure, prices trending upwards. What I can see off the bat is this large move here. So I can see that price was creating higher highs, higher lows, high high, higher low. We created a high high, meaning this is the high high, this is the previous higher low, and it's indicating that we're pushing higher. But this, if we draw a horizontal ray from this high to this low, we can see price has not broken structure to the upside, has not broken structure to the downside. What I'm looking for, it's very close to, but I'm looking for a close on the weekly time frame, either above or below this viewpoint. So the weekly viewpoint is actually bullish. So even though you're scalping, guys, the cool thing with this strategy, you can execute on any time frame that you want. But if you're scalping, you're choosing to take those short-term trades, you can scale this right down. So you can do this process up until the 4 hour. You just want to execute on the 4 hour, that's perfectly fine. Or even the daily, it's completely up to you. It works on either. It just depends on your personality and your trading style. There's plenty of people that execute on the 15-minute time frame or the hourly time frame, right? Because they're both very clean and easy time frames to use. And if you're a complete beginner and you're struggling going down to the lower time frames, those higher time frames might be a better opportunity for you option. So right now we're bullish because we haven't closed above or below, and this is the previous move that's indicating price is moving higher. As we can see, this is the previous like market structure. We're trending upwards, right? That this does not mean that we're bullish, right? But the weekly is indicating that we are heading in that direction. So what we want to do now is go down to the next time frame, the daily time frame, and we don't really want to look beyond the weekly. So whatever the previous time frame was, you've already identified that range. I don't need to be looking over here because it's not relevant. So what we want to do is scope in, zoom in, and actually look at market structure here. What I can identify is this move right here. Because we had price would pulled back, we started pushing higher, created a high low, high high. It's broken structure, as you can see from this high. You can see it's closed above that. If I draw a horizontal ray from here and this low, we can see price has not broken above or below that range. So therefore, the daily immediate viewpoint is from that low to that high. So if I go back to the weekly, we can see we're scaling down now. And what we're trying to do and what viewpoints allow you to do is just identify the next step. It's to get that overall picture, work your way down to whatever time frame that you're willing to execute on. If I was executing on the daily time frame here and I had a fundamental bias and I wanted to be taking buys, because right now the US dollar is not doing so well, I'd be looking for areas on the daily to take a buy from. Might be this area down here where this key level is, stop loss at the low, take profit at the high. Now that would take probably a couple of weeks for that to play out, but it's completely up to you. But we're just getting the overall picture and finding out what is the next step, not what's the next 5 steps ahead, just what's the next step. So 4 hour now. And sometimes you'll see that viewpoints are actually very similar to the previous viewpoint, or they could be the same. Now this one, it's really, it's a bit tricky because this isn't much of a key level or a structural point for me at all on the 4 hour time frame. This is more of a 15-minute or hourly low, higher low. So I don't really want to mark this as my 4 hour range. And I already have this marked out. If you want, if you're starting out, you can just put 4 hour there. And I use these little dots because it's just easier. You don't have writing across your screen, but you can hover over it and see. And to write that text, you just double click and write it in there. But I don't really want extra stuff on my chart. So I'm just going to leave it as the daily is the same as the 4 hour. You can mark that out, but I know that this is most likely going to be an hourly immediate viewpoint. So weekly, daily, 4 hour is bullish. So indicating price is going up. The hourly, what I can see now, starting from the top, prices working our way down. I can see that this is the previous lower high. This is the previous lower low. Price has not broken above, price has not broken below. So what that is indicating right now, because we've got, if I do this, I copy this. So we've got weekly, daily, 4 hours bullish, indicating that we're overall, that asset overall long term is trending upwards. On the lower time frames, the hourly, what that is indicating, because it's bearish now, It's indicating that we are retracing within the 4 hour. I hope that makes sense. So the 4 hours bullish, the 1 hour is bearish. So that's indicating that price, like as we can see in this movement, is trending lower, coming into lower areas. And overall, it's not telling us that we're going to plow through and change structure completely long term. It's just indicating that we're coming lower inside the 4 hour range. Now, if this was the 4 hour range from this low to this high, and price hadn't broken structure yet, I would need price to break structure to the downside on the 4 hour for it to tell me that price is retracing even lower within the daily range. So that's where, if you want to be scalping, you can take short-term short positions and target those, the low of that range. So if I was executing on the 15 minutes or lower right now, and I wanted to be taking shorts, I would be targeting this low, because I don't know if price is going to come all the way down to here, to the low of the daily or the 4 hour range, because that's bullish currently. If it was bearish, then I could expect that market structure will create a new lower low. I hope this is starting to make sense. So we can see the previous 1 hour immediate viewpoint would have been here. If I was to look for a short here, I'd be targeting the next low. A lot of traders, they put in fixed risk to reward trades that are like 6 to 1s or 10 to 1s or anything like that. I don't worry about that. I just target what is the next step. And the next step in this scenario is targeting that low, because that market structure on the lower time frames is telling me that it is bearish. And I know that if I follow market structure, it's most likely going to create a new lower low. But I don't know how far price is going to go. So that's why it's important to identify these ranges, these immediate viewpoints, and just to be able to understand what is the next step. So 1 hour is bearish. What I can see already, I'm going to leave these rays on here. If I go down to the 15 minute, the 15 minutes most likely going to be bullish, because price action's now stepping up. And we can see the previous high, that's correct, is from this high to this low, or probably there is the most safest, because this is consolidation. There's not too much strength here. This is the last actual significant key level, and if I was to mark a key level, I would have marked it from there to there, because that is all pretty much one big key level. So that is indicating that the 15 minute is bullish. It's indicating that the hourly has finished doing its retracement within inside this bullish range. So weekly is bullish, daily is bullish. Remember, this is the daily and 4 hour range. The 1 hour was bearish, indicating that we were retracing within this range. But now the 15 minute is bullish, and that is indicating that price has potentially stopped retracing from here with inside this bullish range, and it's looking to continue that overall, that higher time frame market structure following the weekly, the daily, and the 4 hour. So it's creating higher low. Now it's indicating that we could be forming our higher low here and actually looking to create a higher high. So if I was to take buys in this scenario, and this is why it's still important to have your fundamental bias, because you would have come in and been like, okay, I'm bullish. I only really want to be looking at buys. So that's like the most dominant and safest position to be taking is buys. We've identified weekly, daily, 4 hours bullish, 1 hour is retracing. Now the 15 minutes indicating that we're looking to push higher. If you want to be a little bit more conservative, I'd wait for the hourly to actually break structure here. But this price action right now, it's in this consolidation period. We've been consolidating for a little bit, and it's looking like price is going to fly. Now, this is a good place to be taking an entry, and you'd be using a range of other things, which I'll talk about in future videos, but it could be potentially this area here that price has come back, reacted off it, starting to look higher. Then you'd scale down to the lower time frames and look for an entry. Or you could execute off the 15-minute, but I don't do any viewpoints underneath the 15-minute. The 15-minute is as low as I go. You don't need to go any lower than that. And this is a nice momentum candle here. I look to take a buy, stop loss at the low, and you can target, if I go back now, you can target the top of this range, which is here, for a almost 20 to 1. The goal is to target the next level, high or low, of the previous range. I'm executing on the lower time frames. I want to be taking I'm taking a buy here. I want my take profit at the high of the 1 hour. Obviously the 1 hour, we're right at the top of the 1 hour range here. And we're looking to push higher because it's changing character. So I would target the next immediate viewpoint, which is the 4 hour, which is the same as the daily in this sense. I'd be targeting that high. But what we can see here is that would be my final target. We can see several key levels. So key level, key level, key level, key level. And then the final target, which is this one right here, as your final take profit. All of these areas, these lines here, I'd mark, I'd have alerts set like this just before it. And at each of those levels, I'd be monitoring to see what price does and adjusting my risk accordingly. So I might be risking 1% of this trade. I enter with 8 lots. I might take 1 lot off here or half a lot. Then I take 1 lot off here, 1 lot off here, maybe I leave the rest run and I don't even worry about it, or I take profit early at that level. But that's a way that you can manage your risk accordingly, even though it's a pretty safe bet targeting that level, following overall market structure from the higher time frames. Because what we've done in this scenario is we've gotten the overall picture, that overall market structure and bias, and the higher time frames hold all the significance. And we've managed to scale down and identify the current behaviors of lower time frame market structure. And that's so crucial because we've identified what the next steps are. So you'd come in with your bias and you'd be either bullish or bearish on this asset for a number of reasons. You'd do this analysis, and this is just looking at viewpoints. This isn't looking at any of the other tools that I use. And you would execute accordingly because it would tell you whether or not your bias is correct, or it's all timing, because you could be early. You might have a fundamental bias and you're bullish, but price action is currently showing bearish price action. All you're doing is waiting for bullish confirmation. So a shift in market structure. Bearish, just say we're bearish on the 4 hour, 1 hour. We're looking for a 15-minute bullish change of character. So we're starting to push higher. First indication. Then we want a 1 hour bullish change of character. So now the immediate viewpoint becomes bullish. That is the confirmation we need. Then we'd wait for a retracement inside the 1 hour bullish range to some sort of level wherever you're trading from. Then a lower time frame bullish break of structure, like a 5-minute bullish break of structure, taking that buy, and you're riding the wave to the next level. So it'd be probably the 4 hour high or low, depending on what it is. So I hope that makes sense, guys. And look, this is actually looking like a pretty good trade. But I hope this makes sense, guys. And if you have any questions, let me know in the comment section below, and I'll be more than happy to answer you. If you need to see more videos, I'm happy to show you more videos of this, like I've said in previous ones. If you need more examples shown on different assets, etc., more than happy to do that. But with that being said, I hope you all enjoyed this video. I hope you all understood it and it has given you value in some way, shape, or form. And I will see you on the next video. Thanks, guys.